What's going on, everybody? Welcome back to my YouTube channel. And in today's lesson, I'm going to share with you a trading strategy that has transformed my trading forever. If you're looking for simplicity, if you're looking for consistency, and you want to be a profitable trader, then this video is for you. I recently flipped a £100 account to over 1,000 in the space of 4 to 5 weeks, taking 170 plus trades, returning a 219% using this concept. And I've done it a second time. I flipped a £400 account to over 1,600 in a period of 4 weeks, only taking 22 trades, returning 219%. So this works. It's not going to work for everybody, but if you're looking for simplicity, you're looking for a streamlined approach where you can be laser focused and really understand what the market's doing, then this video is for you. We're going to look at 3 examples today, and I'm going to share with you some of the theories behind this approach. And then once you've watched this, I recommend you go away and take a look for yourself. Without further ado, let's jump on the charts. So the first pair we're going to look at is pound USD. And you can see here, I've selected an area in the market where we have strong bullish momentum. Now you might be saying, well, this is hindsight. Well, of course it's hindsight because it's happened. But we're not going to learn from future results unless we are focused on what's happened in the past, especially as a trader, applying the past into the present with the belief that in the future it's going to happen. Okay, think about that. Now, let's say the market conditions weren't as fluid as this. They were consolidating. They were failing to break the lows. They were failing to break the highs. During this period of trading, guys, we will take losing trades. We will take break-even trades, or we may not trade at all. Whoop-de-doo. But we want to be consistent, and we want to show up every day applying the same concept without deviation, even during these moments. So now we've arrived at the day where the markets are looking good. Now, you might be looking at this and saying, this is a 4H time frame. I'm an intraday trader. This is not the time frame I want to be trading. And I fully agree. I don't really want to be taking a higher low trade and look for a 2-hour win in the space of 12 hours. That's not me. I want to show up. I want to understand the sentiment and the behavior of the market. I want to get in. I want to get out. And I want to get the maximum I possibly can from the markets. So why am I sharing this with you? Well, let me show you something. This bullish movement for the whole period of the day, we are talking about 20 hours worth of information here, has derived from one place. And this is the key. This movement, whether it be a higher low, break and retest, breakouts, whatever you want to call it, has derived from one place, a single candle. And this is the theme behind this concept. Every single strategy that you trade, be it break and retest, breakouts, supply demand, whatever it may be, has to derive from a single candle, being the daily, within a 24-hour period. And all I'm asking you to do is to look at this daily candle when you arrive in the morning. You can see the previous candle closed bullish. At the first sign of a trading opportunity today, the current daily candle is bullish. And when we go down to the 4H time frame, we can see what? A theme of bullish candles. So when we're looking at this, we need to be very, very sure that our decisions for today is going to be bullish. Now, we don't want to trade the 4H time frame, so we want to use scaling down techniques. And in order to do that, guys, we need to just simply hold the belief that the market is going to continue bullish. Now, how do we do that? Well, look here. This current candle has closed bullish. You can add whatever you want to this, being that price is failing to break the structural lows and failing to break the structural highs, whatever. You can say to yourself that price is broken above, has retested, and now we're looking for a continuation, whatever. You can say that there's a breakout, and because it's broken the highs, we must continue up, whatever. It doesn't matter at this point. What matters is that you understand that the daily candle is bullish. The previous 4H candle has closed bullish. And in anticipation of the daily candle continuing to push bullish, the next 4H candle will be bullish. Scaling down to the 15-minute time frame, we can see here, prices fail to break the lows, fail to break the highs. Finally, we have a break of a high and a retest. And then what are we looking for here? Bullish momentum candle, stop loss within the consolidation, or below a higher low and or below structure. And what do we have? A 3-hour trade with an 8-pip stop loss, 24-pip target in the space of, goodness knows, no one cares. A very short period of time. Now, is that better than holding the trade for 12 hours to get 2R? or to understand that the daily candle is bullish, the previous 4H candle closed bullish, the current 4H candle is bullish, and I'm entering in line with the market's direction, bullish. What is simpler, guys? If we look at this again, we can see here, the previous candle has closed bullish. What are we anticipating? Well, because the daily is bullish, that will continue bullish. Now, all we've got to look for in this instance is for price to give us a sign of a bullish opportunity. So that being said, we have a continuation. We have a bullish candle close. We have price creating a bottom wick. And then as we enter this trade as part of a higher low, what do we have here? Look to the left. We'll go 8 pips again. Safe than sorry. You know that's 8 pips right now. What do we have here if we look? A bullish 4H candle. Again, if we pull this to the left, let's remove this one. Go to the daily. What do we have? A bullish candle. Guys, and then we can continue doing this until the cows come home. This is the most simplest way you can approach the markets without getting confused. And all we're doing here is we've identified the overall direction of the market from a single candle that you'll be trading within a 24-hour period, which is bullish. And then you are looking for continuations of that daily bullish candle with the development of candles on 4H, 1H, 30-minute, 15-minute, it doesn't matter where you trade, to identify trading opportunities, and then use scaling down techniques to identify the structure of the market or patterns, whether that be breakouts, whether that be higher lows, whether that be double bottoms, whether that be higher lows, it does not matter. At this point in time, let's say you enter this as a higher low on the breakout of this higher with a stop loss below this area here, let's say for 12 pips. What do we have? Another 3-hour trade. If we go over to the daily time frame, what are we looking at here? A bullish candle. If we go to the 4H, when did we enter? When the 4H candle was bullish. Oh, is it a coincidence that the previous candle closed bullish as well? Call it what you wish, guys. All we are doing is joining the movement of a candle's movement. Breakout, higher low, double bottom, higher low, breakout. It doesn't matter. Now, you might say, oh, again, Rox, you know, this is played out. It's easy to say when it's done. No, guys, it's not. If you hold on to the belief, then it's always going to be easy for you. And you will always be able to take advantage of these movements because you will always be executing on the process that you know has a positive expectancy and works. It's only until you become confused and you lack the belief that you start to jump around and get confused. Nothing is confusing about entering when a candle is bullish or entering knowing that the higher time frame candle, being the daily, is bullish and it will continue bullish for the day. Because if you look at this daily time frame, how many bullish or bearish candles do you see on here that have closed bullish or bearish that you could have been a part of at some point? Let's look at a second example on CADJPY. Again, you can see here in the markets, we have a very nice downtrend, okay? We have 1H bullish candles now. So we've gone from 4H to 1H. 1H bullish candles continuing to push bullish for the period of, this is 1 o'clock and this is 9 o'clock. Okay, so a good period of time. But let me go over to, let's say, the daily time frame. What do we see here? Bearish candle, bearish candle. If we go to the 4H, what do we see here? Bearish candle, but we're using the hourly. So how do we do this? Well, the exact same thing. All we need to do is hold on to the belief that the daily candle is bearish and or the 4-hour candles are bearish, and then look for trading opportunities. I don't care how you do it, and it doesn't matter how you do it as long as you hold on to the belief system. Let's just say here, prices in the consolidation. Finally, we have a breakout. Let's say you take the trade like this because now we're in the 15-minute time frame with the hourly, and you say, this is how I want to take the trade. Is this not a trading opportunity if you just go for 1 to 2? What are we doing here? We are taking the trade based on the fact that price is pushing bearish and it must continue to push bearish. Again, if we go over to the 4H, what do we see here? Bearish candle. If we go to the daily, what do we see here? Bearish candle. If we want more fluent entries, we might say to ourselves, well, I'm waiting for the market to create a higher low with a smaller stop loss. Here we can enter again on the break of the structure with a break of the low, stop loss above, and then go for a target, a better target. What do we see here? Entering on a bearish candle. If we pull this over and we go to the 4H, what are we doing here? We're entering on a bearish candle. What are we doing here on the daily? We're entering on a bearish candle. It's not rocket science, okay? And then again, however you add your confluences in terms of lower time frame scaling down techniques is absolutely up to you, okay? Here again, you have an opportunity in the market. We have lower lows and lower highs. You enter here, stop loss above, 3R. whatever, doesn't matter. Again, you're entering on a bearish candle. I mean, I don't know what to say. And the focus should be the higher time frame, not the lower time frame. The lower time frame just gives you an opportunity to enter with a more earlier entry and a safer stop loss. Let's look at one more example on GJ. Here you can see bullish sentiment in the market on the hourly. Go to the 4H, what do we see? Bullish candles. Go to the daily, what do we see? A bullish candle. Okay, so from an hourly perspective, moving over here to, what are we on now? The 5-minute. What do we see? We see structure of the market making higher highs and higher lows. We've broken out for consolidation, whatever you want to look at here. And you can see here, price is now closed bullish. This is a bullish candle close. Okay. Here you can see on the next hourly candle, price has created a bottom wick. We are flipping bullish at this point or this point. It doesn't matter. Stop loss below or below. Again, it doesn't matter. And then what are we anticipating? Price to continue bullish. Previous candle closed bullish, anticipating the next candle's closed bullish. What do we see here in this instance? We see a higher low. Current hourly candle is bullish, stop loss below with a continuation higher. Bob's your uncle. If we scale these to the left, or that's the right actually, to the right, 4H candles are bullish, daily candles are bullish, hourly candles are bullish, sentiment in the market is bullish. That's it. I don't know how long this video was, but all I'm going to say is this is a masterclass in itself for you to keep your trading simple, to no longer be confused about the direction of the market, and to take trades with absolute confidence and belief that guess what? The market's going to continue in your direction. Why? Because we're joining the movement and we're not trying to be too smart. We're not trying to think too many things out. We're not trying to wait for the perfect confluence. We're just joining the market's movement. And again, if you look at the market, every day a candle's got to close bullish or bearish at some point. The big question is, can you be a part of that movement? If you enjoyed this video, guys, please make sure you hit that like button, subscribe, turn on notifications. And until next time, as I always say, continue to trust the process.